Hi friends, Young Lee here with the Young Lee Group at Properties. And today in Chicago Real Estate with Young Lee, I am going to try and answer one of the most common questions we've gotten from the hundreds of buyers we have helped over the years. And that is, what are closing costs? So you have found the home of your dreams, you have the down payment ready, and then you find out there are additional fees to purchase the home. What are those fees? Those are typically closing costs or settlement costs to finalize the transaction so that you are the new owner of that home. Now, these are the 9 most common closing costs. You might have some different ones depending on where you live or your municipality or the lender you choose, but we're just gonna go over the 9 most common ones right now. So number 1 is the appraisal fee. So the appraisal fee is the fee that your lender charges to hire an appraisal company so that they can go out and make sure of what the home that you are interested in is worth. They want to make sure that they lend you money based off of a home that is worth at least what you want to pay for it. This is typically paid up front, and it's paid within the first week or 2 when the appraisal is done. Number 2 is the credit report fee. The credit report fee is charged by your lender as well, and that's to pull your credit report so that they can check your credit, see your revolving debt, and best gauge what you can get approved for your loan. That as well is paid up front so that they can run that report. Next, number 3 is your loan origination fee. The loan origination fee is the charges your lender charges so that they can get the loan ready and done for you and get that mortgage ready so that you have your loan in place. Number 4 is an optional charge, and that is a loan discount fee. A loan discount fee is sometimes buyers like to pay a lump sum of money up front at closing to buy down their interest rate so that they can have a lower interest rate for the term of their mortgage. That's called a loan discount fee or loan discount points. This is an optional charge, and a lot of people don't do that, but some people, if they want lower interest rate for their mortgage, you can pay a discount fee to buy down your mortgage rate. Now, these first 4 only apply if you are getting a mortgage. If you are buying cash, these do not apply, but these are very common. Number 5 is title insurance fees. So title insurance fees are charged by the title company, and they typically cover a title search, title examination, title insurance, document prep. And this is just to make sure that there aren't going to be any liens against your property and that they can hand over the title that is free and clear of any liens, so no one's knocking on your door 2 weeks from now, a year from now, saying that they did work previously and that now you owe them money for the work that was done. So that's title insurance fees. Number 6, PMI premium. PMI stands for private mortgage insurance, and that is charged when you get a loan and you put less than 20% down payment. So the banks like to get covered on that 20% because the federal government covers them on the 80%, but if you're putting less than 20% down, they would like you to get private mortgage insurance, and that's to cover what is less than the 20% that you bring to the table. So if you put 5% down, you would be charged private mortgage insurance or PMI on that 15% that you didn't put short of the 20%. So you can definitely buy a home with less than 20% down, but you will have a PMI charge on your loan. Once you build 20% equity, you can always refinance and get that removed, and we'll go over that in another video. Number 7, prepaid interest fee. So the prepaid interest fee is the fee that you pay at time of closing, and that's just to pay for the remaining days in that month, the interest portion of your mortgage payment. So a lot of clients like to close closer to the end of the month so that they only pay for 1 day or 5 days of interest of their mortgage payment for the remaining days of that month. Other people like to do it at the beginning of the month because you're only paying for the interest portion of your payment and you're not paying any of the principal that is associated with the mortgage. Number 8 is an escrow account. Once again, if you are getting a loan and you are putting less than 20% down, your lender requires you to open an escrow account. Or some people, even if you put more than 20% down, like to get an escrow account. An escrow account is where your lender will take out a certain amount of money every month along with your mortgage payment. And then when your real estate tax bill comes, they pay that real estate tax bill on your behalf. If you put less than 20% down, your lender will require this escrow account so that they can pay the real estate taxes and there aren't any issues or liens because you didn't pay the real estate tax bill. When setting up an escrow account, sometimes lenders will, or a lot of times lenders will require that you put in a couple months worth of cushion in that escrow account so that they have enough funds to pay that tax bill when it comes due. And the last fee that is common in closing costs is recording fees and transfer taxes. Now, this is going to be different with all municipalities and such, but recording fees are just so that they can record with the state and the county so that everyone is aware that you're the new owner of that home. And depending on the county or the town that you live in, some municipalities require you to pay a transfer tax. Sometimes that's the seller's responsibility, sometimes it's the buyer's, and sometimes it is both. But these are the 9 most common closing cost fees that are associated with buying a home. So if you have any questions on any of these, let me know and I'd be happy to walk you through them or explain them in more detail. Or if you would like more information on any of these in particular, please reach out to me. I'd be happy to have a one-on-one consultation with you to explain it as well. Also, please look out for future episodes of Chicago Real Estate with Young Lee and the Young Lee Group. And we are happy to answer any questions that you might have in regards to buying, selling, investing, or renting real estate in the Chicago market. So once again, this is Young Lee with the Young Lee Group. Thanks so much for watching, friends. Hope you have a fabulous day.